let's start off with Mothibi with a broad market overview. What kind of market activity are we seeing over in Botswana right now?
Well, what we're seeing at the moment in Botswana is that we're seeing relatively lower volumes because the market has reasonably kind of stabilized. It had closed the year a little bit lower, but it started moving up very quickly, gaining, I think, around 9% in the past 10 weeks or so. And so, but at the moment now, volumes have come down a little bit. Even though it's the reporting time for the banks, we are not seeing any volume increases anymore at the moment.
Of course, all attention, as you've highlighted, focused on the earnings season and particularly tuned to the numbers out of the banking arena. What have the markets priced in ahead of those respective releases?
Oh yes, we have actually seen quite the prices have actually priced in the expectation of earnings. We have seen PEs improve in the past 2-3 months. Like I said, 75% of the market is approximately the financials, especially the banks themselves. So we have seen the market price in, for example, in FNBs and the Barclays. We have seen prices recover really a lot compared to what it was at the beginning of the year.
Let's hone in on FNB Botswana. It released numbers already for the full year 2010, but these numbers you describe as being silent. So share your perspective with us.
Well, I mean, we have seen the bank is doing well. The operating profit is up, for example, 8%, which is quite reasonable performance, not something to really get carried away with. But we have seen that impairments as well has gone up 62%, which is something which begins to worry you. But on the good side, it's actually coming off a low base, so you're still not very, very worried about it. But the fact that it has gone up a little bit, it's gone up 62%. It's something that you get a little bit worried about. But all in all, the income from interest and non-interest income, it's all gone up impressively. So in all, there is good things to it. Income has gone up, but impairments are a bit coming up as well as a concern.
On a fundamental basis, what kind of an operation are we looking at here? Because when it comes to the features associated with FNB, it seems to be that, its product line and target market are the specific standout characteristics for this bank.
Well, FNB is actually a bit of a differentiated bank, or at least a leader in a way. If you look at the fact that when it comes to ICT, they are heavily reliant on information communications technology. They apply themselves insofar as using that technology. I mean, right now, FNB is actually the bank which is giving out student allowances for the simple reason that probably of all the banks, I think they will have a system which makes it easier to run so many operations, so many transactions, which are probably of lesser value. It's not much of a problem for their systems. So their target market is more of like people who are very much willing to use information communications technology for banking.
When it comes to managing their cost base, I mean, not too long ago we had unions demanding higher wage settlements. What's that cost to income ratio looking like right now?
Well, the cost to income ratio actually has gone down from 38% to 35.8%. I mean, one thing that I really think is an advantage to FNB, ICT is a very big advantage. I mean, what they do with less effort, their competitors do with a lot more effort. I mean, for example, there are many people who don't even go inside the banking hall for many, transactions, but in competitor banks, they will actually have to go inside the banking hall for that. And that creates just a very big advantage. And so that's why you'll see the bank being able to lower its CIR to 35.8%. I mean, the staff costs, even if they increase say 5-6%, it's not really a very big deal to the bank.
So having said all of that, where you've highlighted a risk in that we may well see impairment charges rising, we've seen a cost to income ratio falling back though, and that being managed on a fundamental basis as looking at a pretty solid bank here. What is your view on the share price? Is it trading at fair value right now, or is it presenting buying opportunity?
The thing about it is that the price moved up a little bit too fast. We actually saw a little bit of a pricing opportunity. The price was a bit far from what we thought was a fair value, but very soon, as weeks passed by, it actually quickly gained that and closed the gap. So at the moment, it's trading very, very close to the fair value. At the moment, really the advantage is kind of closed. But at the beginning of the year, I think it was a little bit more. Then the gap was a little bit more, and we had recommended a buy on that. So today, it's really narrowed a little bit.
Very quickly, BIHL, market leader in the insurance space, controlling what, 87% of market share, also out with numbers. Overall view of the company and the numbers released there?
BIHL continues to be the insurance giant in Botswana. The numbers themselves are very encouraging. They are very interesting. The other thing about the one thing about BIHL is that really what we have seen during the recession and the financial crisis of 2008 and 2009, the operations were still doing very well. Operating profit was good, but it was actually the investment income which had really gotten the biggest hit. So in terms of business, since investment income has recovered, we have seen the numbers are now back in line. It's doing very well. I mean, operating profit is very good, income is very good, and investment income is very good as well.